And I'm delighted that we have José Manuel Campa, the chair of the EBA, the European Banking Authority, with us, who will talk about culture, communication, and conduct, not in that order. It's actually culture, conduct, and communication. And I don't know, José Manuel, whether you heard this, but we had Sharon Donaghy from the Irish Central Bank with us before lunch. And actually, she finished exactly on these themes. It was as if you were perfectly coordinated. So very well done already in advance. Thanks for being with us. I know you've been very loyal and committed to this conference, and it's a real pleasure to have you with us again.
Thank you. Thank you very much, and good afternoon to everybody. And Nicolas, as you said, we haven't been perfectly coordinated, but I'm glad that we are, if not coordinated, which I think we are also at least in tune with the same topics, which are something that hopefully that will be of interest. But I am delighted to join again this annual conference on FinTech, which is a topic that I think there is a need for ongoing dialogue between industry regulators and supervisors. And in that context, I think that this conference is a very good example of that. Now, as you said, I participated in previous years in this conference, and I have reflected typically on two themes in the past. The first thing has been on digital transformation of the EU's banking and payment sector and the opportunities and risks that such a transformation will imply in the context of changes to front and back office processes, delivery mechanisms, and business models. A second theme that I highlighted in the past was the need for a balanced regulation to facilitate the use of technologies that show a positive impact, whether on the basis of process efficiency, on risk management, on consumer choice, and experiences when accessing financial services, any area in which the technology can help us improve our daily experiences. Now, 3 years on from the European Commission's digital finance strategy, I am impressed with the progress that has been made, to be honest. Flagship initiatives such as DORA or the Markets in Crypto Asset Regulation, MiCA, set the benchmark globally. The proposal for the Artificial Intelligence Act and the work on digital identities also show the European Commission's continued ambition and thought leadership on regulation in the digital age. And I think this is something that we should all as a community be proud of. We should remind ourselves that this regulatory activity comes against the background of continuous technology experimentation and adoption in the financial sector. For instance, according to the results of our EBA's Autumn Risk Assessment Questionnaire, 95% of EU banks are using pilot testing or developing applications for APIs and also for artificial intelligence solutions. They are relying on cloud computing in an ever-increasing manner, with over 85% of respondent banks now reporting use of cloud computing in their regular activities. And we also see the first signs of pilot and testing of quantum computing solutions within the financial sector. However, as we enter the phase of implementation for many of these initiatives, as you mentioned, I would like to look beyond the regulation itself and reflect on 3 additional and interrelated elements that I think are essential if we are to foster responsible innovation: culture, conduct, and communication. I believe that these 3 elements are as relevant to the regulatory and to the supervisory community as they are to the industry. So let me start first with culture, because I think that is the starting point that we have to ask our question, to all of us, we have to ask ourselves the question, what role do we use technology to play in our financial sector? Do we wish it to be deployed in pursuance of societal goals, such as improving the resiliency of the financial sector, or mitigating financial exclusion, or providing cheaper and better services for citizens, or facilitating the green transition of our economies? Or do we instead tolerate an environment in which technology is deployed by a minority with the explicit objective of arbitraging regulatory requirements, or for the exclusive own benefit of the developers while placing customers at risk due to ineffective risk management and controls? To me, the answer comes down to the culture we instill and the values we uphold. Consistent with the EBA's guidelines on internal governance, I believe that financial institutions should have a culture that encourages a positive attitude towards the application of innovative technologies, but also with a risk mitigation approach front and center of that strategy. Now, what do I mean by this? Well, for me, top-down and bottom-up experimentation, testing, and rollout of innovative technologies should be done with a spirit of open and full dialogue between the business, the technology, and the compliance teams within a financial institution, and also as appropriate with supervisors, a point which I will return to shortly. For example, questions such as, will a new back office process create cyber vulnerabilities that need to be addressed to protect consumers from the risk of data loss or identity fraud? Or questions such as, will a new artificial intelligence application be explained to consumers or to the supervisors? Or will a customer receive clear information about how their data may be shared within or beyond a group in order that they can consent or not in a fully informed manner? To me, these are the type of questions that should be present from the beginning in any discussion about the deployment of an innovative technology in order to ensure that the use of the technology and the relevant operational processes are designed in a way that adequately identifies, measures, and mitigates possible risks. Indeed, this approach is also something we reflect in our own deliverables at the ABA, such as in the guidelines on remote customer onboarding, where we identify the utility of innovative technologies for customer due diligence and identify safeguards that need to be applied to ensure that this technology use is responsible and in line with the AML-CFT expectations. As we see an increased rollout of technologies by financial institutions, we expect a commensurate scaling up on technology, risk, and risk mitigation techniques at the level of the management body so they can set the tone. Because if you get the culture right in the organization, I think that you have the foundation on which responsible innovation can thrive in the future. Similarly, for supervisors, we expect a culture that on the one hand promotes an openness towards financial innovation, while at the same time, on the other hand, equips supervisors to understand the risks and challenges effectively in the course of supervisory evaluation procedures as these new technologies get embedded in the organizations that they supervise. Now, let me move to the second aspect, conduct. In my view, and very much linked to the cultural issues I just discussed, responsible innovation requires a forward-looking, proactive compliance by design approach, building processes, systems, products, and services that take account of regulatory requirements that apply today, but also take into account those that are expected to apply in the future. The markets in crypto assets regulation, MiCA, on which a final European parliamentary vote is expected shortly, as you all know, will set out extensive requirements for issuers of asset reference and e-money tokens, and we expect those requirements to now apply from mid-2024. However, I would encourage any firm anticipating launching such a token during the transition period to already seek the design of their procedures, reserves, and so on, as if MiCA was already to be enforced. Not only will this prevent the firm from having to implement potentially costly changes at a later stage, but it will also give any issuers of those tokens confidence in the compliance mindset of the issuer itself. As another example, taking inspiration from the proposal on the Artificial Intelligence Act and following our report on big data and advanced analytics, I will also encourage any financial institution looking to use artificial intelligence or machine learning in the context of creditworthiness assessments to robust test these models and ensure that outcomes are aligned with the overall risk appetite of their institution and that any outcomes are explainable to customers and supervisors. Equally, every responsible innovation, I think, must rely on an approach that takes account of consumer-facing considerations, such as the need to ensure that customers have readily accessible and well-presented information on product features and risks so that they can make informed choices when considering financial service online. That they also have a clear access points in the events of queries or complaints so that they can get help right away, and that they can make fully informed consents regarding the use of their personal data, and also are not inadvertently excluded from financial services due to technological applications, encoding, and intended biases in them. Now, let me move on to the third aspect, which is communication. Indeed, as we all know, communication is always key at many levels. But today, I would like to focus on the role that effective communication has to play in the interaction between industry participants and supervisors as technologies get embedded into the organizations. From the design to implementation stage, I would strongly encourage financial institutions to engage in an open dialogue with their supervisors to understand any supervisory expectations toward the deployment of an innovative technology. Supervisors should also take a proactive approach to enhancing knowledge about financial innovations and building skills to supervise effectively the use of innovative technology in the financial sector. This dialogue can facilitate a common understanding of opportunities and risks and can be a very helpful input in shaping the supervisor's update or issuance of new supervisory guidance. Communication, I think, is also key when we consider the complementarity of RegTech and SupTech applications, a topic on which I know you focus later this afternoon. For instance, in the context of regulatory reporting, interoperability may be key, but of course cannot be achieved if industry and supervisors design their technology applications in silos, a point we have highlighted in the EBA's RegTech report we published recently. Indeed, this is a point we also stressed in the context of our 2022 SupTech monitoring work, which involved the stock take of SupTech tools developed or deployed by national competent authorities across the Union. 553 SupTech tools have been reported by competent authorities, of which 216 are already tested and deployed, and 163 are at the pilot stage. The tools span microprudential supervision, AML-CFT supervision, deposit protection, and macroprudential issues. So we see that there's a very wide application already of SupTech tools and technologies across the Union. Now, notions such as embedded supervision are also increasingly under consideration in the context of the use of monitoring crypto assets and increasingly decentralized business applications. We found that the vast majority of competent authorities represented on the ABA's Board of Supervisors have or are in the process of developing a strategy or plan that covers SupTech and also are making substantial technology investments, for instance, to integrate robotic process automation in reviewing their supervisory information and data that they collect. During this year, we will continue this dialogue to facilitate knowledge and experiences exchange, and this is a very active work of our agenda. As an example, we have a workshop for competent authorities tomorrow on social media monitoring of SupTech tools, which will allow for an exchange on experience acquired with the application of tools such as the deployed to date, and to discuss the main benefits and practical considerations. This workshop, I think, is very appropriate at a time when we know that social media is being increasingly used as a forum for advertising financial services and can pose risks as identified in our crypto asset warning last year that we published with the other ESAs. We will also continue to contribute to skills development within the supervisory community, including via the EU's recently established Supervisory Digital Finance Academy, which this year will be enhanced with a series of advanced trainings for supervisors on topics such as artificial intelligence, DLT, and cyber risks. Again, I must underscore the need for continuous dialogue between industry and supervisors on technology topics in order to facilitate the development of complementary and interoperable applications and to foster common understandings on opportunities and risks. Now, let me focus a little bit on what can you expect from us in 2023 within this agenda. It will not surprise you that much of our focus for this year will be on DORA and MiCA related activities. By now, DORA needs no introduction to any of you. Its aims of strengthening the EU financial sector rules on ICT risk management, of harmonizing ICT incident reporting, and introducing an oversight framework for critical ICT third-party providers are well known to all of you by now. Now, following the publication in the official journal, we have started the work here at the ABA jointly with the other ESAs on the policy mandates and on the broad parameters of the oversight framework for critical ICT third-party providers, working also in close cooperation with an ESA. On MiCA, of course, we do not yet have a final text, but expect its entry into force in late spring, starting the clock on an intensive phase also again for policy delivery work in relation to issuers of asset reference and e-money tokens that should be developed over the next 2 years. All of our work in this area, of course, will involve active communication with industry stakeholders and also intense interactions with them. I currently anticipate that our consultation phase on the vast majority of the technical standards and guidelines under MiCA will begin in October of this year. We'll also be commencing activities to expand our market monitoring and supervisory capacity to prepare for our supervision tasks in relation to significant issuers. And let me also use this opportunity to note that we're taking forward important on-initiative work to promote convergence in supervisory expectations towards asset reference tokens and e-money token issuance activities in the transition phase between now and the application of MiCA. Now, for both DORA and MiCA, we're also preparing responses to the Commission's call for advice on issues such as oversight and supervisory fees, and also significant criteria for determining issuers, actively engaging again with industry workshops in this spring to try to inform this work. The EBA, we're also taking actions to ensure that money laundering and terrorist financing risks are tackled holistically across the crypto asset service sector while waiting for the finalization of the new AML regulations within the Union. This means that we will bring revisions to our existing AML CFT guidelines, including the fund transfers guidelines and the money laundering terrorist financing risk factor guidelines, so that we can set common regulatory expectations on the management of financial crime risk in the context of crypto asset services as well. We remain committed to making sure that financial crime has no place in Europe as these new technologies get implemented. More broadly, consistent with our statutory objectives of monitoring financial innovation and fostering supervision knowledge exchange, we'll continue to map innovation trends. In particular, this year we'll focus on artificial intelligence use cases, tokenization in relation to new financial products and services, digital identity management, and DeFi. We expect to publish a follow-up report to our November discussion paper on the use of machine learning for IRB models, and we'll also keep monitoring the landscape of the use of the most advanced machine learning models for IRB going forward. Finally, our capacity as chairs of the European Forum for Innovation Facilitators, this year we will foster cross-sectoral dialogue between the supervisors of the EU's banking, securities and markets and insurance and pensions authorities on digital threats across the financial sector. We have two specific reports planned in this area, one in the context of the review of experience acquired with innovation hubs and regulatory sandboxes, the other in the context of our latest stock-taking on the role of large mixed activity groups, especially big techs, as providers of financial sectors, whether they're directly or in partnership with financial institutions. Of course, we'll continue to engage proactively again in this work with this ongoing policy work with the EU counterparties as well as in international levels. At the international level, and I'll finish with this, we'll continue to provide inputs to the work of the international standard setters, such as the Basel Committee on Banking Supervision, in relation to work to promote common classification of crypto assets under the recently published framework for the prudential treatment of banks' exposures to crypto assets, and also at the Financial Stability Board in relation to the so-called global stablecoins and the regulation of crypto asset service providers. As always, a lot going on, as you can imagine, and as you can see. And I can only say that we collectively as an industry, supervisory and regulatory community, keep in mind the 3 C's that I started my conversation today with: culture, conduct, and communication. I think we will remain well placed to ensure that technological innovation can continue to be embedded as a force for good in the EU financial sector. I look forward to the continued dialogue and, of course, happy to respond to any questions or comments you may have. Nikolai, thanks again for the invitation and for all the work that you put into organizing such an exceptional conference.
No, thank you very much indeed. It's a pleasure to organize a conference if I know the quality of participation and speakers is so good and that you take out the time, so the compliment goes the other way. But José Manuel, we have got a few questions that came in response to this very interesting speech. I've also written down a few. Maybe I start, I've got 4. Let's see whether we can manage them all or not. So I take them in a kind of a random basis. But the first one was on DORA, because you raised DORA. And I saw yesterday, of course, there was the first hearing, and I see the EBA seems to be taking the lead on incident reporting and certain other aspects, which doesn't surprise me, given your work in that area. But the question is, what advice would you give to potential critical third-party providers from outside the EU to prepare for DORA? And I think it's a fair question because nobody knows yet formally whether they will or won't be designated, at least many might or might not know. And how should third country providers prepare, because they might not even know whether they're caught or not caught by DORA.
Yeah, I mean, I guess my impression is that, first of all, as we know in many of these, many in these industries, the key concern that we have here is that there's been a lot of subcontracting to third parties, obviously, but at the same time, that subcontracting tends to be concentrated in a relatively small number of providers. So when you say about third country providers, my impression is that, the candidates to be under oversight are relatively well identifiable, and I think they themselves can probably, I don't want to be too assertive here, but they can probably guess who could be on the list without a lot of guesstimation. My impression, as you know, we are now working on a landscaping, trying to identify both a little bit of what could be potential candidates, but more important, what could be the characteristics that would define critical third-party providers, so that then we can go based on those characteristics, and we're providing that call for advice to the Commission that we can go more specifically to identify those that are there. But I think the important thing for us, and my key recommendation to them, will be to engage with us. As you say, yesterday we had our first outreach and the possibility to engage. It was very, very widely attended. I'm happy to hear that, and that's also important for us because it's a new community. So we need to make sure that at this point we outreach to as wider of an audience as possible. Following the funnel principle, in which let's start broad, and then we'll end up maybe with a smaller set, and certainly with a smaller set of critical third-party providers. But let's make sure that we test the whole universe and that we don't leave either by omission or any important aspect as we develop this new regulation and this new policy work. So I think that my recommendation for them is first that they engage with us, and second, that if they're providing active services as subcontractors to supervise European financial entities, then they should consider themselves as potential targets for this regulation, this oversight, and they should definitely follow it closely.
I think maybe following up on that, and I see there's even more questions come in, we will see how many we can take. But I think a lot hinges on the concept of criticality. The co-legislators avoided defining the concept of criticality, which is kind of slightly awkward for the industry to plan. When thinking about what criticality might mean, taking your constituency, the banking sector, or the payment sector, you could argue criticality is criticality to the financial system as a whole. Or it could be criticality in the sense of critical functions from a recovery and resolution perspective. Or you could take criticality as customer-facing applications, so where the disruption would have a significant impact on the real economy. Or you could define it in many other ways. Because it is so hard to define what criticality is, when you started your scoping exercise last year, we got the feedback from financial institutions. They didn't really quite know how to kind of assess all their different outsourcing arrangements or suppliers against particular criteria. I know it's too early, and I'm not trying to extract any expectations from you as to how you define criticality, but have you started thinking about a methodology or the approach to try and deal with these issues, given there's so many different forms of looking at what criticality might or might not mean?
Yeah, Nicholas, I mean, you pointed to obviously a very key question, and I think it's, as you say, we're now currently working on this. I'm not discovering anything if I were to say that, so I'm not in a position to tell you exactly the definition. But to me, as I think through these issues, the key aspect is we need to step back and think about this is about, right? Fundamentally, this basically is about operational resilience. Right? So when we think about criticality, we think about making sure that we have an operational resilient system. And that has, to me, two components at the core of it. One is the fact that, and we were very clear on our guidelines on subcontracting of these 3 years ago. We think that supervised financial institutions need to have the ability to have a proper assessment of their resilience throughout the value-added chain of the process, whether those are being done internally or externally, and that supervisors should have the ability to supervise and feel comfortable about that overall value-added chain. Again, regardless of whether it's being provided internally or externally. Now we know that over time there's been a lot of subcontracting, so it's much more likely that many of these processes are done externally. So that's the first aspect. The second one, as I said before, is the expectation that or the perception, and I don't know if it's real or not. We'll have to check. But certainly there's a perception that it's a fair amount of concentration of this provision of these subcontracting services into a small number of providers, and that raises to me issues of operational resilience, not just on an institution by institution basis, but also on a system-wide basis. And that's an area in which we need to assess, to what extent a provider, a third-party provider, is critical not just on an institution basis in terms of the contracts that they have with each one of them, but also potentially for the system as a whole. So for me, again, it's about operational resilience and in those two dimensions that I just defined.
Thank you. No, that helps. I think, as you say, what we always say is, if you think you're a critical third-party provider, most likely one of the ESAs will have already knocked on your door politely. But good. Maybe moving to MiCA or to crypto assets, because you raised it. And I want to bring in the theme of supervisory convergence. You said how important it is to the mandate of the EBA and the ESAs to contribute to supervisory convergence. But there is, of course, a tension between, in this period of implementation, as you say, in the first year, first 18 months, first 2 years of MiCA, that we're seeing a bit of a race for licensing regimes. So different providers are running to different jurisdictions, seeing where they might or might not get the licenses, how the existing AML recognition can contribute to that. So you see a bit of a competitive dynamics within the European market. I don't quite know how to phrase this as a question, but I can see a certain challenge for you to contribute to supervisory convergence in this initial stage while the dust is settling. And an additional question that came in addition to that, when it's not quite clear in certain cases whether a crypto asset is in the scope of MiCA, is outside the scope of MiCA, might or might not be a commodity or a security, therefore fall out of the whole framework altogether. So I don't know how you've thought about this dynamic next 2 or 3 years to try and bed down the framework. Thereafter, I think we will learn and to become clearer, but we see this uncertainty in the next few years.
Yeah, Nicholas, I mean, this is very much in my mind, and to be honest, I appreciate it. I appreciate your question, because if you notice in my remarks, I made a point on this, a specific reference to how I viewed that an issue of MiCA should be approached, an issue of a crypto asset that may be under the MiCA regulation should be approached this transition period. And to me, this was in my part of culture. It's probably that they need to be forward-looking, and they need to think about the fact that if they're going to be issuing such an instrument, although the regulation is not in place yet, they should do the analysis and tell it, do I consider that this instrument that can be issued is likely or not to be under this regulation? And if it's likely to be, I think they probably should be better off by making sure that they're already trying to anticipate. I understand it's difficult to say that they will comply when a lot of the policy work has not been developed yet, but at least that they try to anticipate what are the likely requirements that the regulation will have once put in place, and that they comply with that. That's one aspect. Now, on the other aspect that you mentioned, and it's an area in which we're actively engaging, and actually our competent authorities are asking us also to be proactive in this area, is how do we try to coordinate, at least on the new activity that's taking place right now. The new activity that say providing licenses. First, maybe have some information about who is in the application process, whether there are any lessons learned while you're managing these applications to competent authority that should be useful for other ones. Also, who has been registered where and for what, so that as they use that license to provide services across the union or other national competent authorities feel comfortable, they see activities from the licensee in their own jurisdiction. So we're working within our internal networks, subgroups, in a mechanisms for coordination. And I don't think I'll discover anything just as an example, because this is very ongoing, but we have a board of supervisors next week, and this is one of the issues we're going to discuss. We're going to give our initial assessment of how to implement the MiCA mandate, and one of the key issues is not just about implementing the mandate, but also how we coordinate in the interim process, which I think is very important.
Thank you. And I think it's also good that at least on the stable coins, on the piece that you are taking charge of as the EBA, we've seen already call for advice. Not on the other areas of MiCA, but at least in your area, we have at least a first glimpse of where it might go, and that's very interesting. A third area of questions that came in reflects, I think, what you raised at the beginning, which is in a way the dynamic between what I call horizontal legislation that is not sector specific, like the Artificial Intelligence Act or the Data Act or the Digital Markets Act or whatever else these things that are out there, and then applying it to specific sectors. And obviously in artificial intelligence, you just mentioned it yourself, in the context of creditworthiness assessments, it's already in there, it's seen as a high risk activity, but it cuts across some of the mandates and responsibilities that you have as the EBA. How do you see potential tension, or how do you see the relationship between these horizontal pieces of legislation that can by definition not go into the same level of granularity and the work that you're doing? And I guess, how do we ensure, putting it differently, that ultimately the sector supervisors, you understanding the industry better, take the final word on the application of these pieces of legislation, and we don't have other horizontal supervisors prescribing rules onto you, as we've seen in data privacy, for example?
Yeah, I mean, this is a clear challenge, but I would say it's not a new challenge in many ways. There are many aspects in which we have, horizontal legislation, and then we have a sector-specific application of that horizontal legislation. I think, for instance, in the corporate governance area, there's a lot of legislation about corporations should be run, boards, board compositions, memberships, and then there's application to a specific areas like the financial sector, which we have much more in many aspects. So I don't think that this is particularly new. What is different, and I think that it's important for us to be aware of, so that we have challenges, is two aspects, if I may. One is that it's about a new topic, which is technology. So we need to be familiar with the topic, and we need to have a good understanding of what that topic and that technology is bringing to my industry and what the implications are. That's why my remarks today about make sure that that technology brings with the right culture, the right conduct, the right communication with supervisors, how that gets implemented. I think that's going to be very important, because it will help us understand better why is this being put forward. And then the second aspect, which I think is probably more new and a bit more difficult, is the nature of this technology, which, as you say, is very horizontal. It's applied to many sectors many times, but it has a lot of interlinkages and network effects and potential, cross sectoral activities. So you mentioned at the end of your remarks, data privacy. That's a clear area in which we need to make sure that there is a proper management of data privacy across the board, but also data usage, and data access. It's another area in which we want to make sure there's a level playing field across the board. And for us, I think what that implies is engagement with a much broader set of regulators than we have done in the past. I mentioned ENISA in my remarks. That's an obvious area for DORA, but as we go, obviously data protection will be, and data management will be a key area going forward, which we need to engage with data regulators. I would say even further, competition authorities will become also very relevant as we see cross-sectoral activity taking place and how that interacts with the financial sector. So I think that broader outreach, and without taking into account the fact that this will have to be done also at the global level, which just adds another dimension of difficulty. But the broader outreach, I think, is one of the key challenges that will be confronted going forward. As a very, very narrow piece of that is the enhanced amount of cooperation and joint-mindedness that just DORA and MiCA imposes on the three ISAs themselves, which we are collaborating much more probably than in previous pieces of legislation. So this is just going to get more complex in that aspect.
No, and thank you. I'm conscious of time, but I think we'll see next year. You raised the interesting question of mixed groups and the role of non-financial institutions entering the market. Maybe it's something we might elaborate on next year when we see the open finance proposal evolving through the legislative process and so on. But I think for today, thank you very much indeed, José Manuel, for being with us, for these very interesting thoughts, and also for setting out your work program for this year, which alone for the EBA seems quite demanding and ambitious, given that you've got the day-to-day supervisory issues and Basel implementation and bank resolution and all the other things on the table as well. Thank you very much indeed for being with us, and hopefully see you soon.
Thank you very much for the invitation.
Not at all. Thank you very much.